Today's announcement by the Reserve Bank of a 25 basis point reduction in the official cash rate was good news for New Zealand households and businesses because it means lower mortgage rates, it means more money in people's back pockets, and therefore more ability for businesses to invest, hire people and grow. I think we shouldn't underestimate the impact for New Zealand of successive reduction in interest rates over the past 9 months. To put this into context, for someone on a $500,000 mortgage, 200 basis points of reductions amounts to $300 a week less in mortgage payments. $300 a fortnight less in mortgage payments. That is significant. That money makes a difference not only to families when they're at the supermarket checkout, but it also makes a difference to local businesses who can look forward to New Zealanders having more money to spend. And with that, I'll take your questions.
Right. Minister, are you concerned about the impacts that Trump's tariffs could have on potential future OCR cuts?
Well, what the Reserve Bank have said very plainly today is that they are observing the global situation carefully and that there is more room to move to reduce interest rates if need be. That's appropriate because what that means is that should the economy require stimulus, the Reserve Bank is positioned to provide it by lowering interest rates and therefore generating economic activity.
You said yesterday that it's too soon to kind of see the impact that these tariffs will have on people's mortgages. Can you provide some kind of timeline for people as to when that picture might be a bit clearer?
Well, the Reserve Bank has indicated today that they are watching the situation carefully. They've noted that there are factors on both sides. On the one hand, there are things that could drive global inflation lower because of reduced global growth. On the other hand, supply chain disruptions and the like could drive global inflation higher. They're keeping a watching brief. The next update is in May, and at that point, I believe the Reserve Bank will make it clearer to New Zealanders which way they see the interest rate track going. What I read into their statement today is that they see that there's potential for interest rates to go lower than was the case prior to Trump's tariffs.
There's a lot of anxiety around the tariffs. Is it possible that New Zealand could actually be a generic benefit out of that situation?
Look, there is a scenario in which some of our exporters do well out of this because comparatively we face lower tariffs than some other countries. We also have very nimble, resilient exporters. New Zealand has made its way in the world by fighting for access to global markets. We've had disruptions before and we've successfully fought back. I back our exporters, the government backs our exporters. We'll be fighting for their market access using every means that we have, and I look forward to some of them finding new markets, new people to buy their products and services and doing well out of this. But I'm mindful, I just want to say I am mindful that for exporters as a whole, this is still a significant disruption. Some will suffer and the government is very conscious of that.
Given your comments earlier though, are you confident that the Reserve Bank, if for instance this really does have a contractionary effect on the New Zealand economy, the Reserve Bank is in a position to provide stimulus, taking pressure off the government if you like to do that fiscally?
Yes, and that's what the Reserve Bank statement today suggests. I note that the official cash rate is at 3.5%. There are many more reductions between 3.5 and 0.
I'm jumping the gun, but if things really go south, at what point would you be happy to sign off on allowing the RBNZ to use quantitative easing again?
I don't think it's appropriate to jump the gun today. My message to New Zealanders has been consistent. Let's be calm, let's be aware, let's be prepared, but let's not overreact.
Would you be happier to let the OCR do its thing before considering alternative monetary policy, or would you be open to looking at some other tools in addition to the OCR? I'm
simply, Janae, not going to project forward to a scenario that is not yet unfolding.
First OCR in a while without Adrian Orr. Has anything been significantly different in this one?
No, not that I can observe. I do note that in their statement of meeting, the Reserve Bank has acknowledged that there were divergent views from members of the Monetary Policy Committee on whether inflation risks were downside or neutral. I think that's really good that the Reserve Bank reflects that they're having the same debates that economists across the world and across New Zealand are having. I welcome that transparency.
Do you think there's more opportunity for divergent views to be voiced in the current set up?
I just think it's the reality that as events are unfolding and uncertainty abounds, that people will have slightly different views on which way this is all going to land. And I think it's honest and transparent for all of us to acknowledge we don't know yet.
We've been tracking downward in terms of these reductions. Is it possible that that trend will reverse?
It doesn't seem likely to me at this stage that interest rates are going anywhere but down. Ultimately, those are decisions for the Reserve Bank. What they've indicated today is there's more room for further reductions. What I see today doesn't give any suggestion to me that interest rates will be rising anytime soon.
What do you make of the Reserve Bank saying that the demand for our exports is likely to decrease?
Look, I think that's consistent with the update I gave yesterday. As I said, we export 70% to the Asian region, which has been hit hard by tariffs and retaliatory tariffs. And so when those markets suffer a blow like that, it's likely that demand for our exports may reduce.
Does this ease pressure on you to reduce government spending?
Look, I think right now what New Zealanders need from their government is an absolute commitment to strengthening and growing this economy. We had that commitment last week. We've had yet more affirmation that that's the right course. We will be delivering a pro-growth budget and a budget that secures New Zealand's place in a world that's unstable. We need to be a place of stability, of predictable fiscal policy, a place that backs investment in business and trade. We are that government. We're the right government for the times.
But did the savings targets help, and will they continue to help in future budgets?
Look, our focus is on the investments that New Zealand needs. We need to be investing more in our health system, education system, defence force, and making social investments for the future. The way to achieve that without saddling New Zealanders with more debt and taxes is to be careful about every dollar we spend and, where necessary, reprioritise dollars to their best use.
It sounds more holistic, it doesn't sound target-focused.
It is holistic because our focus is on the things that matter to New Zealanders. And what they want to see is investment in the services they really rely on, in our hospitals, our GPs, our schools. That's the government's focus. And we campaigned on a commitment that where we saw wasteful spending or where we saw dollars not going to their best use or creating the most impact, that we would be prepared to shift those resources to better use. We are keeping our commitment.
And why are you supporting the New Zealand wool industry even though it's more expensive, especially during times of cost saving?
Well, I'd reject your assertion. When you're judging expense, when you're judging cost, I think you should always look through the lens of value. And value is not just about the price today, it's about the cost of something over its whole of life. It's about the benefits that it delivers. And in the case of New Zealand wool, we're talking about an incredible natural fibre that has outstanding qualities. And we're also talking about a fibre that's produced in New Zealand. When we back wool, we back farmers, we back Kiwi jobs, we back our communities. I say he's a little bit jealous because we've had the courage to change the government procurement approach to put a real emphasis on what is the value and impact for the New Zealand economy. Consultation on our revised procurement guidelines closed this week. We will be reviewing the submissions. Our intent is very clear. We want to make it easier for firms who are contributing to the growth of this economy to win government contracts. It's a very clear policy. It's a shame that the last government didn't do it, but we're getting on with the job.
Barbara Edmonds has just accused you of sitting on your hands amid a global economic crisis, leading the Reserve Bank to act for New Zealanders who are worried about their jobs more than King's Out.
Well, I would say to Barbara Edmonds that in my role, if I was to hit the panic button, that would be the wrong thing to do. We have had an experiment in New Zealand with what happens when a government decides to put the money hose on full beam straight away. And actually what we saw from the last government was that it indulged in huge amounts of borrowing, but we have very little to show for that as a country other than $100 billion more in debt and a cost of living crisis. We've seen Barbara Edmonds' playbook before and it did not work out well for New Zealanders.
You also say that it's ironic that you're now claiming the Reserve Bank's moves as a win when you spend so long on opposition criticising the Reserve Bank.
Look, I always welcome moves that are good for New Zealanders, and reductions in interest rates are good for New Zealanders. This is a Reserve Bank decision, but as a government we can either help the Reserve Bank or work against it. By being disciplined about spending, we've created the room that gives the Reserve Bank the choice to drop interest rates. The last government made that almost impossible. They were spending so much money and wasting so much themselves that all the Reserve Bank could do was increase interest rates. We're in a different time now and we've got the right approach.
Just going back, I know you can't underpin the Reserve Bank, but given the events of the last week or so, should Kiwis grasp any mortgage rate they can right now?
Look, it's not for me to give financial advice. The Reserve Bank has noted today that they think there is more room for interest rate reductions, and that is the path that they set out at their last update, continuing interest rate reductions. They've indicated they're watching global developments closely. At 3.5, the OCR is not as low as it gets.
So have you received any requests from industry or exporters for the kind of fiscal support that Bradley was talking about? Have you received that request?
Not that I'm aware of, no.
You've talked about the need for...
I'll tell you what they have been asking for: keep fighting for us to get access to markets, and that's what our government is doing.
You've talked about the need for stability, and that's obviously something that offers great stability for those on lower incomes is the winter energy payment. But in the House today you said you didn't want to play the rule in, rule out game. Would it not give, some of those families that, that need that payment a bit more comfort to say that, we're not going to take that off the table in the budget?
Well, all they need to do is look at Christopher Luxon's pre-election commitment card, which makes a very clear commitment to the winter energy payment.
Minister, your government has said that it's sort of tough on banks and keen to support competition in the banking sector, but a bill's been introduced to Parliament to amend the CCCFA to change the law in a way that affects class action currently before the courts involving 150,000 bank customers. Are you actually soft on banks?
No, we are pro-New Zealanders, and we are always conscious that when there is significant regulatory uncertainty and when there are potentially multi-billion-dollar liabilities, ultimately it can be consumers that end up paying. The government has a responsibility to make its rules clear. Unfortunately, the last government's changes to the Consumer and Credit Finance Act were unclear and have left some financial actors in an invidious position.
And just on Glyn's question before, do you have actual figures in terms of the cost savings that you're looking for, actual targets this time?
Look, the budget is only a few weeks away, and you will see the savings that we are delivering at that point. What you will also see is that those dollars we are saving will be invested in things New Zealanders want. They will be invested in health services, in education services, in our police force and our defence force. We're going to make sure that the tax that we collect is invested in the things Kiwis want to see.
Is there speculation that you're going to cut RNZ's budget, eh?
Well, look, there's going to be speculation about anything and everything between now and budget day. And I know how this rolls. If I start ruling that one in and that one out, the questions never end, so I'm just not going to play the game this time.
Just for completeness, you said that low interest rates are good for New Zealanders. High interest rates are also good for New Zealanders, aren't they? Because they kill inflation?
Well, of course, there are savers who, when interest rates are higher, get a better return on their savings. At the same time, what I want to see is a growing economy. And the simple fact is that when interest rates are lower, that allows businesses, for example, to borrow, to invest in new machinery, to take on new workers, to try and enter a new export market. So in this environment, lower interest rates support more economic activity, they support more growth. And as you know, we're going for growth because that supports good jobs, rising incomes and better public services for New Zealanders.
Amending the law, the CCCFA, to apply retrospectively to a court case, something before the courts, it's fairly unprecedented. I mean, is that good governance?
Look, I'd suggest that you put your questions to the Minister in charge, but what I would put to you is where there is huge vagaries in the law or regulation that can create real uncertainty, and there will be instances where governments have to act to clear up uncertainty.
Thanks, everybody.
Thank you.
One last question. Are you concerned with the OCR shutting down that we are going to see more fuel on the housing crisis in the near future?
Look, actually the evidence that I am seeing is that we are seeing downward pressure on rents. There is some evidence that rents are now starting to stabilise, which is good for housing affordability for many New Zealanders. What we're also seeing is that more New Zealanders can now afford to service a mortgage because the interest rates are lower and therefore their potential repayments are lower. So I think well, what I think we also have to consider is our government's Going for Growth housing plan, which is all about getting the settings right so we have more houses being built to meet the demand. The problem, I think, for the past couple of decades is it's just been too hard to build houses to meet demand. When New Zealanders want to buy houses, the answer isn't to tell them you're not allowed a house. The answer is to build more houses. Thank you.